All right, what's up, everyone? Welcome. Hope you guys are doing good this fine Friday. It is Friday. Okay. Today I want to talk about your USD. I'm accumulating a long position here based on the simple idea that I believe we are in a accumulation phase right now. So I want to show you the way I'm trading accumulation and distribution. I don't have any expectations on NFP. I have not researched that yet, or I'm not going to research that. So I have no expectation on NFP. I do, however, hope that NFP will be the trigger that hopefully triggers a few my positions in here. So I want to talk a little bit about fractional reserve risk, not fractional reserve, fractional risk management as well when in relationship to this trade right here. Yes, let's remove that setup. So first of all, I want to break down my overall long idea on Euro USD, which for that I will go to the future chart. That one is going to be right here. I shared this in the community yesterday, and I believe that what we're seeing on Euro USD is, even though this is not super clean or super obvious, I do believe that what we did see up here was a distribution range. And what we are seeing right now is accumulation. And this is where the big move happened with the Trump getting elected, winning the US elections around that time, right? So from the high to the low, we saw a actually it's not, we have to go to the Oanda chart to look at the actual pip movement. So looking at the Oanda chart, what we see is a +600 pips move to the downside. It's quite a big move after Trump winning the election. Reason why I'm looking at the future chart is because the Euro USD futures or the Euro futures are traded on the CME here, which is a centralized exchange, which means they're reporting the volume correctly. Looking at other trading the overall, the Forex market on the Oanda, Forex market is not centralized, it's decentralized, which means there's no central hub of reporting when it comes to volume and things like that. Looking at the Euro futures, we see that volume is reported correctly, and that also brings a different OBV than what we see on Oanda. So looking at the OBV here, we see that we are seeing some bullish momentum coming in on the OBV. I like that you also have a nice break of the structure of the OBV. It tells us that there's a buying pressure coming in at these levels. We have the accumulation. We got the MACD also signaling a potential trend shift right here. Now, of course, we do have the NFP. I'm going to be layering some orders within this range, and I'm hoping that I will be filled on those orders given the volatility of the NFP. Now, if the NFP numbers come in, I guess it's going to be much higher or lower than expected. I guess that's where we're going to get a big move. And I'm hoping that the move on EU will be a strong move to the downside so that I will be able to add to this position with max risk. And then of course the way, as it says right here, build a position within accumulation, add to position on confirmation, which is a break above the range highs, the highs of this accumulation range, and then trade the trend between breakout and TP. So what I'm expecting is, well, not expecting, but if this is the overall high time frame support for Euro USD, I'm expecting that we're going to get a breakout and hit this level above, and my TP is going to be at the last local low on the daily, where this move originated from based on the Trump elections. This accumulation distribution range type of trade will of course be managed based on daily structures. But when the breakout happens, I am expecting a nice 4-hour trend to form somewhere in this area. And I will be trading that 4-hour trend as well as swing trades. So sort of a swing slash position trade being taken within accumulation. Break and retest or just a breakout means that I can limit the losses of these positions, take that risk that I've limited, add that risk to the trade to the upside, and then also trade this within the secondary trend. So you can see here, and I also believe that, if this is high time from accumulation, I believe that this might potentially also be the start of a new major trend. That's the overall idea, looking at the MACD and the OBV, and of course looking at the volume that comes in here as well. I would love to see a good increase in volume on that breakout to see volume confirming price action. And a volume spike on the breakout would look like something like this. I would love to see a move up on a daily without any type of volume spikes above these highs. Tells me that it's most likely going to be a fake out, right? Most likely going to be a fake out. This volume bar looks horrible. Better. All right. So that's the overall idea of the adding to this position within accumulation. Another thing that I wanted to show you that is adding to this idea is, of course, the seasonality data. That we can see here. So this is the seasonality data for EURUSD over the past 24 years. We can see that the period between, what is it? The period between about around November, the beginning of November to the end of December, we have a 70% win rate of going long with an analyzed return of 12%, which is obviously quite massive, which means that if you go long in the around November on your USD and you sell at the end of December, you would theoretically have made money 70% of the time. Now, this is on a 24-year basis, which means it's 75% of the time for 24 instances, which is not a huge number, but it's definitely something where it's adding confidence. And you can also see on the seasonality data for EURUSD, between November and the end of December is when you have the biggest volatility of the year. This is where the biggest move of the year comes in. And another thing that I like is also to go back to, well, I think we can actually look at the volume on Oanda for this one, even though it's just tick volume. Actually, no, it's actually terrible, terrible. Because tick volume gives you no, just useless information with volume. What I like here is you have a strong, you have on this move to the downside, you have declining volume. From that high, from this high, all the way down here, or at least on this move to the downside, declining volume. Means there's less and less interest in this downtrend. What I also like is the fact that on this candle, which I view as a capitulation candle, you have a volume spike. And you can actually see how this is such a strong capitulation. If you look at EURUSD, last time we had that type of volume and that type of volume spike was in August, the beginning of August this year. And you can see that volume spike and that insane move to the downside on Euro USD. Just in that candle alone, you have a massive move. That's what I'm also watching. I believe this to be an obvious panic move. This is capitulation basically. And when you have a strong move to the downside before you reach that accumulation, you want to see a strong capitulation move. That usually marks a bottom. There are, of course, a lot of things that are not agreeing with this analysis. One being the overall macroeconomic view of EURUSD right now. The relationship between the central bank in Europe and America, where we have a central bank divergence, where the Fed is perhaps not looking to raise interest rates, but they are perhaps looking at being a little bit more cautious with interest rates. While the European Central Bank, looking at the economy, they're obviously pressured to, pressured to lower rates to stimulate the economy, because the economy in Europe is not doing very well. So fundamentally, we're not really seeing a strong euro. However, if this turns around That's what the trade is based on. The economy in Europe starts to show signs of recovery. The political situation in France is stabilizing. Germany has an election coming up, and after that, I'm hoping that we'll see some stability across the euro area. Trump coming into power, a lot of people say that he's going to work hard to negotiate a peace deal within Ukraine. A lot of people, they're pricing that in. The moves that we see in the market a lot of times are pricing in what will happen in the future, not what's happening right now. And I'm seeing this as, this accumulation rate for EU, a possible sign that the worst is behind us in terms of bearish price action. But of course, price has to confirm that. One thing that is quite interesting when you're trading the high time frames from a accumulation and distribution point of view is if you look at the Dow theory, what Charles Dow talked about in the development of the Dow theory is that the primary trend is infallible. What does that mean? It means that you can't manipulate the primary trend. The primary trend will move in the cycles that the market moves in, okay? On the secondary trend, you will have bigger price fluctuations based on what's happening right now today in the market. And then, as he calls it, the intermediate trends or the intraday fluctuations. Back then he talked about, and remember this is around 100 or 150 years ago, he talked about basically day trading as being impossible to make money long term. Now, of course, today we have different types. We can do analysis in different ways, and that was way before the computers. So today, of course, you can be profitable making money, but the argument still holds true. The primary trend, the high time frame trend, you cannot manipulate those. It will move with the cycles, the natural rhythm of the markets, the natural rhythms of human psychology and the way that the financial cycle works. You will not be able to manipulate that. You can, however, manipulate the lower time frames and make prices move a couple of pips up and down, and that's certainly going to happen with news events. But on the high time frames, price discounts everything. It will absorb what's happening, digest the information, and move between accumulation and distribution. And that's the beauty of position trading and swing trading this way. And as you see, of course, I'm combining many different techniques, and the way I'm trading on the as a day trading swing trader, if you will, like I'm not going to be able to trade EU in this range. I will, however, be able to trade EU quite successfully if you have trends that look like this or this. Then I will apply my trend following system, the RLZ method, right? And this is a combination of, finding accumulation areas in the market where I look to accumulate long positions. A breakout signals that this trend will start up to wherever distribution is. And in this case, we might see distribution here, or perhaps reaccumulation in this area for a move to distribute up here. Looking at the overall market trend for Euro USD, now we're looking at the monthly. On the monthly chart, we are seeing that we are currently in a monthly range, and we are currently accumulating on range lows of this monthly range. And this overall idea is to ride the wave or the cycle within the overall bigger picture of the market, the monthly trend right here, which aligns quite nicely with a long-term horizontal level right here as well, and the range EQ of the monthly range. This is where I'm taking TP. So this is basically a trade from monthly range low to monthly EQ based on a distribution pattern that is quite obvious and visible on the daily, where I do believe that we had distribution, a move down, accumulation, and I'm thinking we'll stop moving higher. This is basically how the markets move on the higher time frames. And for that move up to happen, for us to enter that public participation phase of the cycle, there has to be catalysts. Now, the NFP might be one part of that catalyst, but I believe that the economic situation and the political situation in the EU will be that catalyst. And I think it's time for EU to show some positive news. That's the overall analysis on EU. Now, let me talk about, so I only have one position in EU at this point. Let me talk about the my stop loss for these long trades are going to be, where do I have the stop loss for this one? It's right here. That's the stop loss. That's the overall validation. Now, I kind of would like, price should obviously not move below the capitulation move for this trade to be valid. And I don't think it's going to move below this level. So I want to make sure that I scale into this position to get a good average entry. And the way I'm going to play this is, if that can be my average entry, then by not doing anything, the risk to reward of this trade will be 2. So I will have to calculate the positions to make sure I get an average entry of this price. I think my first buy was around this price. So I'll have to perhaps increase position size the more I go down, and perhaps have one final order right here for a possible wick down. And the way I'm going to trade this is, that's going to be my entry, that's going to be my stop loss, right? For this particular beginning stages of this trend. Like for you guys watching, I didn't plan this ahead, but it kind of turns into a masterclass of scaling the position and managing the position and adding to winners. This is really powerful stuff. This is based on 8 years of experience with risk management and adding into positions. This is not something that, this is not your ordinary technical analysis education right here. Like, this is, if you do this right, you can make a serious amount of money on a trade like this. Because you look at this and you say, you know, what do you mean? Like, this is not a high risk to reward trade. No, that's because we're scaling in. It's going to become a really high risk to reward trade. So imagine that we've scaled in. So maybe our entry is here. Maybe we did not get the best entries. So the risk to reward of this trade right now is 1.5. And let's say we risk $500 on a trade like this. Which on my account would be around 0.5%. Okay, so let's say we have around 0.5% here on this one. Okay, price breaks out. Daily close above that level. Daily candle closes here. And I see this now as confirmation. What I do now is I move stops up here. Price is now trading up at that level, right? Let's actually add a level. Active risk. Now to make it a little bit simpler, let's just put it at right here. Okay, so active risk now turns into 250. So what I'm doing now is I'm entering a new position here with that as a stop loss. And on that position, I'm adding 250 in risk on that move. So now again, 500. So again, we got 500 risk on the first one. So initial risk was 500 on the first one. Initial risk on the second one is 250. Give me a second. $500 initial risk. $50. We get a breakout. Retest. We move higher. Stops. Now moved here. We have 0 risk on that one. That 250 gets cut in half. We now have an active risk of 125. Price is now trading up here. We enter a new position here. That being a stop loss. That's going to be my TP. We're going to risk on this. We're going to risk 375. 375 active risk on that one. Brings our risk back up to 500. Let's say price retest that level, right? And then starts moving up to this level. Stop losses here. That risk turns into a 150, so 125. Let's say 75 on that one. Let me do some calculations. 375 minus about 25%. We have that one for 75. Yeah, so 75. We now have active risk of 356. We're also making some money on this one. So if that stop loss gets hit, we're gonna make about 250. So let's just say 200, right? We got active risk here is 156. Okay, so let's just say we get that move up to hitting TP. Because we get that move, hit TP. So our initial plan and our initial risk here was a 500. Let's see. So our initial planned profit for the first position was 725. What is the final risk to reward? That's going to be 1.49. 0.64 plus 1. So the initial final risk to reward is going to be around 3.2, and the profit is going to be on 1600. Means on my account that would be 1% profit. With this, with the initial risk of 500, an initial TP of 725, we increase the risk to reward from 1.49 to 3.2. Now, why are we doing this? That's because we're increasing the position size with confirmation, and we're applying the idea of a trending market will continue to trend until the trend ends, and we want to be following that trend, and we want to, you know, accumulate more of the asset and move our stops up within that trend. Of course, these are very wide stop losses, okay, and the positions are rather small. So by using tighter stop loss and utilizing more analysis on the lower time frames, you can get tighter stop losses, free up more capital. But the thing is, of course, now you don't want price to, you know, reject here and then move down to your stop loss, and you're going to lose money on an idea that was correct. So of course you want to look at taking some money on the way up. But one way to trade this as well is to, if you have this breakout on the daily, you want to be trading that local trend using a separate approach with separate positions, where you're trading perhaps the break and retest here, but the TP is going to be the same. And now that trade is going to be a 2.7R trade. So if you have the high time frame bias, if you're looking at accumulation, move up to resistance, and you have a position trade open, then of course, if that position trade is activated and you think it's highly likely that that position trade will move in that direction, that's when you want to go into lower time frames, because you now have a high time frame bias in mind. You're trading with the high time frames, and start taking the same trade but with stricter risk management and tighter stop loss and more active trading. And that's how you can squeeze as much money as possible out of a trend that is you know, a trending move that doesn't come along very often in the market. So with this approach, when the trade is a winner, you'll have a big winner. When it's a loser, you're never going to have a big loser. And then when it comes to the fractal reserve or the fractal risk management, you want to make sure that the overall risk that you're taking on this trade, and this is a way where if you do this the right way, you're never going to lose your account. It's going to be literally impossible for you to lose that account. What you want to do, now imagine that you have $160,000 in your funded account. Your stop out level is 150,400. Say you have a balance of 162,000, and your stop out level is 150,400, which is the stop out level at 6% on the hypergrowth program that I'm trading with fibers. And this is pretty much the numbers that I'm playing around with. So what you do is you take 160. This is based on the drawdown of your system, but doing it this way, you'll be fairly safe. 160,000 minus 150,400 equals Yeah, I'm using a calculator. No way I'm doing that in my head. Because I'm very good at analyzing the markets, but I'm really bad at math. That's why I'm here trading. Not, well, I guess. The difference is 11,600. So the distance between the balance and the stop loss level is 11,600. Now what you want to do is you want to take 11,600 and you want to divide that by 10. That gives you 1,160. So the total risk per trade is going to be 1,160. And then you're going to do this calculation for every new trade that you're going to take. And this number here is the total risk of the position. So what I need to do, if I want to have 5 orders in this range, I take 1,160, divide that by 5, and each of the position is going to have a 232 risk per position. Now, you do this every time. So if you're in a drawdown, and let's say you have 151 in your account, then obviously what you have to do is you have to take 151 minus 100 and look at the difference between the 151,000 minus 150,400 gives you 600. And then you take 600 divided by 10 gives you 60. Now your total risk per trade is going to be 60. What this does is you will lower your risk per trade the deeper into drawdown you come. And the higher your account balance goes, you will increase that risk to a max limit where the loss does not exceed the daily loss limit. And then you have to look at, do you have a floating P&L stop loss with the daily stop loss limit, or do you have it absolute? There is a max level of risk, and I'm not risking more than the previous example was I think 1,100. I'm not risking more than $1,000 on a trade. So this is the way you want to do risk management. It's super important to understand this, because what you do is, the deeper you go into drawdown, the less you're risking, which means I'm very close at this number. I'm very close to my stop out level, right? I'm only I believe I'm, what is it, $600 from, yeah, $600 from my stop out level. If I lose $600, I lose the account. But I can take 10 trades before I lose the account. And if it's 500, I decrease the risk per trade to 50. So now I can take 10 more trades before I lose the account. It's very important, because that's how you keep an account. If you just continue with 1% trade, 1% risk per trade, 1% risk per trade, you're going to lose the account in an account like this. You're going to lose it in 6 trades. And if you continue with the same risk per amount per trade, you're never going to keep that account long term. I've never lost a funded account. When I get funded, I know how to keep that account. I've never blown any account. I've never lost a single funded account. Not personal account, no nothing. I mean, in the beginning when I was leverage trading crypto, of course, taking it 200 times leverage long a Bitcoin with a tight stop. I mean, but that's, that's a learning phase. But with this system, you can't lose a funded account unless there's something catastrophic that happens. You forget to put in a stop loss, or you take a trade during NFP and you forget that it's NFPs, things like that, and you get slippage. That can be a nightmare. But you want to make sure that you keep the account. Your job is not to make money. Your mind is to your job as a trader is not to make money. It's to keep the money, and then with good risk management, you'll be able to make money. It kind of like goes hand in hand. To keep the money, and you'll make money. Because without the money, good luck making money. Okay, I need to sit down for this. Okay, so now I actually need to enter some order. You know, the thing with when you find an accumulation range like this, I mean, it's quite obvious at this point, isn't it? When the range becomes obvious, that's when that's usually when the accumulation is done. But I'm hoping that, and I would love to see a fake out and like a move like this before we start moving higher. That would be perfect. Absolutely perfect. And I have time. I mean, I've got time. I'm not staying in this position for quite a long time. But now I want to look at where do I want to fill up on this position. Definitely here. And then I want one here. I should probably put an order right down there if there's a breakout or a break to the downside. Right, so I'm gonna calculate the position. Thing with these live streams is, you know, I'm actually trading, you know, sometimes there has to be quiet moment where focusing. I'm really looking forward to setting up these position trades, because when I'm positioned well in the market, I can start looking at more low time frame trading. I would love to have more live streams next week where I do more low time frame trading. I feel like it's much easier to do that type of trading when you're already done with your high time frame stuff, you know, like you're already positioned well in the swing trades, you know, you have a good idea of the high time frames, and then you can relax, let those traders do a thing and focus on the low time frames. And when you're scalping or trading low time frames, you need to do this calculation before every trading session, and then make sure you update that. So let's say I want scalping I would say if you divide your available risk by 10 when scalping, you want to cut that in half again, so it's 20 losses in a row. So I want 3 more orders, and that was that entry. If I do 25, 25, 25, 25, then this level around here would be my average entry. If I do 20, 20, 20, and 60, then average entry would be around this area. Okay, so that's now calculated what size the different positions should be. I'm on the this is a good question, but I'm on the hypergrowth account, which has no news restrictions. My orders can be activated with the news. This is only valid on the high stakes account, but I'm on the hypergrowth account. And I wouldn't make any money on this as well. So even if I was on the high stakes account, the orders being filled, it's low time frame orders. I don't think that would be a problem. I mean, you would probably have to have a talk with the firm first and build a relationship with the fivers and tell them like I'm a long-term position trader, and you know, obviously build a relationship with them. But of course you would not be trading like this if you have a high stakes account. This is going to be my next order. I kind of wish I didn't need to have a stop loss, because this is more of a mental stop loss. I mean, price can easily wick down and then stop moving higher. So I kind of wish I did not have to have a stop loss. And maybe when time comes, if price moves down here, I might, increase the stop loss to perhaps this level to make sure I can survive a wick down. Okay, so the all the orders are in the market. What's my view on DAX? Let's take a look at it. So the way that the news trading works at the fivers is, if you lose money, then you lose money. If you win, if you make money on, so first of all, if you're on the high stakes account, this only applies to a high stakes account, none of the other accounts. If you are on a high stakes account and you make money on a news move, you will not get that money. If you lose money, then the loss is yours. You take the loss, but you do not take the profit. And the reason for this is, on the high stakes account, you're not supposed to be trading during news as well. So if you do trade during news and you make money, you don't get that money because you're going against the rules and you're not trading the way you should be trading with a high stakes account. If you want to be trading that way, then you should be trading with a hypergrowth account. However, if you entered the position several weeks ago and you make money on the NFP move, then you'll most likely be able to keep that money. I'm pretty sure it's the trades where you enter a position within the 4-minute window and then it hits TP within that 4-minute window or after that 4-minute window. That's when you're going against the rules. Look at the DAX. Wow, holy shit, what's going on here? Well, I'm telling you. Okay, so let's look at the UK 100. I'm gonna look at. I need to look at the European indices here. Okay, so let's look at the weekly. I mean, this is. Gotta say, man, it's looking pretty interesting in the euro market. So looking at a possible breakout on EU 50, possible breakout on on the I think this is a FTSE 100, right? It's the UK 100. Yeah, so possible breakout here as well. That would be massive. And Germany is already broken out. So the DAX has already had a massive, massive breakout right here. And it's also showing the same structure that EU 50 is. So maybe we have a... How long was this? 263 days. Two days. Okay, so that range is, what's that? That range on the... I do, however, like this. Look at the picture perfect formation here on DAX. Look at how you have that trend line, you get that break out of the channel. I mean, you have the channel right here, right? Breaks out of the top of that channel. Guess we can't see, it's only the tick. Now look at this. Add the... God damn it, why am I not looking at these moves? That is absolutely beautiful. That's a perfect move right there, guys. Look at this. Add the reload zone right there. God damn it. Look at that. Perfect. How could I have missed this? Reclaim. Is that a long signal as well? Wow, that's right before that move. We had a long signal. That's the beauty right there. Look at this. What if we, you know, look at that retest and then the reclaim of that level as confirmation could have easily entered here and just trail your stop up with every low on the 4 hour, and I mean you would have been in 4 hour profit here. Man, I gotta look more into the indices. What are we looking at now? Look at the 1 hour. Trend is very much alive here. Very much alive. I think we might want to look at a possible long here on the DAX. Maybe even this breakout, because if you add a level on here going to lower time frames, that already got retested. Maybe there's more fuel here. Let's go out to the higher time frames. I guess this is all-time highs like everything else in the equity market. Look at the weekly. We got a possible retest here on the weekly. That would mean that we have a major rejection though, which might happen. Let's put I'm gonna put an alert here. Really like this though. I really like this breakout. Be a nice breakout move. Okay, where do we have the fibs? I think the extensions, I think we're actually hitting the extension fibs here. Gonna be up here. Unfortunately, I think the move has already happened on DAX, but I think this might be, we might continue this breakout. The problem here is, of course, we have NFP today, and you don't want to go long on the DAX with and by the way, we had an announcement with the fibers yesterday. I believe that we lowered the commissions and the swaps for indices, so trading indices and the fibers is back. which makes me very happy because I took a, you know, this long trade on the S&P 500. I took this on my personal account, but I didn't take it on the Fiverr because of the swaps and the commissions. But the commissions and the swaps are now lowered, which means I can take trades like this long term without having to worry too much about the swaps eating up my profit. Let's go back to the DAX because I quite like that breakout. So the thing with the DAX, is, especially with this move, is this level never got retested. Got one retest here, no retest, no retest, one retest here. The level has already been retested, and a lot of times, obviously, there's huge momentum to the upside here. But it also feels rather potentially quite. That's a bit insane, isn't it? Looking at the weekly ADX, it's actually forming a bottom here. What is the daily? The daily, look at that. It kind of feels like I'm. Nah, I'm gonna take a trade on this. I'm not gonna be left out on this move. That's too good. I'm gonna average in here. I'm gonna show the prices is the same on here as with Fivers, and it looks like it's somewhat the same. I think the most important one is the low on that 4 hour. Yeah, it looks good. Okay, so now I have to do the position calculation again. Four orders, I think 5 is too much. So I'm gonna start putting in orders for the DAX, starting with one market order. Next one. This is the third order. And then the fourth one is right here on the 50. We'll see. Have a small position open now. TP is going to be up here. And we'll see. Kind of makes sense. It does make sense to put TP below 20,500 though, because of the, you know, the psychology of even numbers. But we'll work on that once if this is confirmed. Okay, let's look at let's look at USD CAD. So NFP is one of those events that can really move the market. So if you see, like, this is the candle that we saw when Trump tweeted about the tariffs on Canada. That gave us a daily 196 pip move to the downside or to the upside, and you're currently about 70 pips above your stop loss. I would say in normal circumstances a 70 pip stop loss is safe, and it depends, you know, are you trading based on the news? Have you back tested this idea of keeping your trades open during the news? Have you looked at past NFP events? How did that affect the market? I would say from a technical point of view, I would not close this position, because from a technical point of view, this is like right on the reload zone, right at in a daily trend. It looks very good, but then of course you go out to the weekly and you see that it's, you know what, I would like, you're in a good position. I cannot give you any advice, of course, but I think you're in a good position. I'm gonna mark my open positions with a green flag. Oh man, there's so many markets and so little time. There's so much money to make and so little time. I want to look for more accumulation areas. We got USD CHF at resistance right here. This is on the weekly. Pretty interesting trend line, isn't it? That is interesting. That is very interesting. Okay, so we have a high time frame trend line here. Let's, I'm just gonna remove that and I'm gonna add it myself. Got a channel. If Euro USD breaks to the upside, USD CHF should break to the downside. It's all in alignment with the dollar currency index at high time frame resistance as well. Definitely a trend line to keep in mind. We add a level here. You can see that that level is the low of this range. Let's remove that one. You only want that on the weekly. This is currently the support area we're looking at. On the daily. We also have a very obvious head and shoulders here on USD-CHF. I would perhaps view the the neckline of that head and shoulders as that level. So we definitely have a trade here. I'm gonna make a new template here. That's the 50% of that move. That would be the target of this move to the downside. Could perhaps see a move like this. Trade would then be this. Like that. So I'm going to be adding an alert down here. And you see what I did here? Looked at the higher time frames. Started at the weekly, went down to the daily, looked at accumulation distribution, ranges, went down to the 4 hour, looked at entry points. We're putting an alert down here. USD CAD. Not really interested in USD CAD here. Euro GBP, I mean, I know I looked at a short trade here, and obviously that idea would be valid now, and it looks very bearish here, and the overall trend is just so very bearish here. But what are we seeing on the weekly? We're hitting a level that we reclaimed this in 2016, and we have not lost it since then. If we lose it, we obviously go down below to this level. So looking at the higher time frames, this is a great area to accumulate. We are also very low in this area, which means the risk to reward is high. You can definitely have a stop loss all the way down here. What that is, it's like 50 pips below. The thing is, though, we're not really entering. I think we need to reclaim this level first before we start talking about longs, because this is not really, I'm not really seeing the signs of accumulation here. Looking at price action up here, this is more the type of price action I expect within accumulation, a range basically. Looking at current price action, I'm not really seeing the obvious range. Even though it's here, we still have a very bearish characteristics. I'm not really feeling it. Not on Euro AD either. The Euro NCD is just in a massive range and it's not at the highs or the lows. The Euro C step. Look at this. This is trading at the very lows. I think we need to put a level on. You can obviously see that there is a possible accumulation on Euro CHF, but I'm not getting a read on that chart, so I'm moving on to the next one. This idea has already played out. This was the trade we took in beginning of November. Can remove all of this now. GBP USD has already, and it looks like it's already confirmed and have exited that possible inverse head and shoulders pattern. So there's a lot of strength in the, with GBP USD. Looking at the weekly, we have a nice bullish candle right there. A very good low on seems like we also went down into the reload zone here. Oh man, that's perfect. Look at that. That is absolutely perfect. That's a picture perfect play of the reload zone. Yeah, this is I feel like GU is starting a this is the beginning of a possible new uptrend. Now the question is, where do we have the targets of this move? I would say that the first TP would be around this area, but because of the fact, given the high time frame, long term nature of this setup and the chart, how long have I been streaming now? Almost 1 hour 40 minutes. I'm gonna take a break. Considering the high time frame nature of this chart and the cyclical nature of this, I mean, look at this. Too good. Put on the reload zone to the upside. We're gonna remove the 50. Then we have that level. And that level also aligns with that wick on the monthly. A very good level here. What about the weekly? Good level on the weekly. Yeah, everything I know about technical analysis is basically telling us that we have a possible uptrend starting here on GU. I would want to see this come up into the reload zone. What are we talking in terms of pip movement? We're talking about 400. Let's look at the seasonality index for GBP/USD. Yeah, it's between November, December. Looks good. Looks very good for the last 5 years. I mean, we obviously have a high time frame resistance here. Which would act as a confirmation area. I think the risk to reward here is pretty decent because the invalidation level would be below this possible, was it right shoulder? The possible head and shoulders. Probably try to get an entry around this level. I would probably like to exit around here. Back to the daily. Yep, I think that's a good trade. I'm already long through USD, which obviously means that GU is positive correlation between them. So we'll have to lower risk. Take a smaller position on GU. All right, back to calculating the risk. And now the way I'm calculating risk here is combining the open and planned risk of both the Euro USD position and the DAX position, removing that open risk from the total risk, dividing that what's left, dividing that by 10, and then adding that to GU with a small by removing a little bit to make sure that I'm not entering it at too high risk here. Look at that weekly move. That looks so nice up to that level. From the long RLZ to the short RLZ. Should probably scale into this. I mean, I wanna get some piece of the action if we break out. Guess I'm taking the open risk from EU. Removing the open risk from the DAX trade. Dividing by 10. To 1050. Divide that by 4. That's the risk per trade. Per position. Okay, so we go to back GBP USD. One will be entered at market. First position in. Want my next position to be here. Third position is going to be down here. And my fourth position all the way down here. Hope they all get filled on NFP. Okay, so that's GBP USD. Positions filled. Not positions, but orders in, and first position is filled. Guess we got some messages I need to grab. Okay, GBP80, strong move to the upside, hitting range highs right here. I will be looking at. So it's important that when you're looking at possible accumulation and distribution, I mean, what you want to look at in terms of, you want to look at slow accumulation and slow distribution, and this is a perfect example of a slow accumulation here and here. When you see this type of price action on on a high time frame support, you could be sure that that is accumulation happening right there. And then you can see on that breakout right there on the daily, that's confirmation, right? And that's when you want to add risk and perhaps stop moving your stops. And this move happens in 1 hour candle, 1 daily candle. So imagine if you got a average entry inside this area right here, and let's see, a weekly level, where could that be? Yeah, right here. I would probably watching that as my TP, and you see that daily candle just shoots straight up onto that level. And this is a 3R trade just from this alone, and that's 3R in 1 week. It's just very simple, very simple. So there's actually one stock I want to look at, which is a newly listed company on the Stockholm Stock Exchange. Obviously had, wow, that was quite the crazy move on this thing. This is a stock that I'm looking to accumulate. This is a company that it's like an online pharmacy, and I've been using it alone. I'm using it myself quite a lot, and it's a really good website. It's just very, all in all, it's a company that I really believe in, and they got listed. Well, today actually got listed on today, and I'm looking to see the. I'm looking to basically see how this can form some sort of accumulation and start building a position long term for this company, which I really believe will be a huge hit. It seems like GBP80 of GBP80 has, I've had a couple of clean accumulation phases, but not as many distribution phases. You have, of course, this one is a beautiful distribution phase right here with that breakdown, then down to that low. But most of the distribution phases here are quite quick, but we do see some nice accumulation phases here. So And it seems that every time we've hit this high here, we've got rejected, but there's nothing really in terms of accumulation on the daily. We can go to the 4-hour. It's not really any type of accumulation in the 4-hour well. So this is not the type of chart that I want to look at in that, you know, in that point of view from a long-term accumulation point of view. Okay, so AUD/USD is, as you can see, dropping quite massively. Now this is something, this is definitely a pair that you want to pay attention to. You had previous accumulation around this area with that wick and this wick. I mean, look at this. There's a lot of buying interest down here, a lot of buying interest in that area. AUD/USD is definitely one of those pairs where you want to look at price moving down into this area and forming a break of structure. This is one of those trades where if we form some sort of, like, just some simple signs of possible accumulation down here, then of course that's something you want to be buying. So we're going to be putting an alert here. What about AUD/NZD? Not sure. I don't think it's super obvious. We do have a level down here though. Like if price can move down here and establish some type of support or accumulation phase, that's something we want to pay attention to. We also obviously have the reload zone here as well. The move down into this area, that would be interesting in putting an alert on here. And obviously we have AUD/CHF trading at long-term support, basically a high time frame level. Statistically, looking at past price action, AUD/CHF usually does not trade below this level for very long. And if that happens, we could be looking at entering long positions. I got my alerts down here on a breakout. And here we have NZD/USD potentially forming a accumulation range within a bigger structure. Go out to the weekly, we see weekly level. This could potentially act as long-term support. Going down to the daily, we'll see, do we have a range forming? I can very clearly see a take profit target up here, which I also think aligns with the 0.618. Almost. Look at the weekly there, though. I think that's a really good profit target. In the weekly, we have a big, massive range here with nice weekly candle right there. Okay, so on the daily, looked at the weekly for profit target areas. Now on the daily, we're gonna look at the range. That's the accumulation range. These levels here align with range EQ. I honestly think that NCD USD is right at, like, it's right below range GQ. This kind of is the level where you want to have your entry. That's going to be the invalidation, right? If we break below this level, then there's no more accumulation. I actually think this looks very interesting. A really good entry inside what I believe to be an accumulation range at high time frame support. Can move out to the weekly, and we see this level right here. I really like this as a long-term trade. Again, this is another currency that is accumulating versus USD, but it's also one of those that has the highest risk to reward. So I think, yeah, this looks good. I'm gonna start building a position on this one as well. So I'm gonna do my recalculation here again. So basically what I'm doing now is I'm positioning myself for December and perhaps January, looking at the volatility that's going to come in around Trump's inauguration and things like that. Right, so let's do the position size calculator as well. Welcome everyone coming in. By the way, see you guys, the new people in here. What's up, Void? What's up, Zach? Hope you're both doing great. I'm going to calculate this position here and go through the rest of the markets, and then I need to take a break. GBP USD trade is in profit right now. The first position is filled on that. I have remove the risk from the euro trade. We remove the DAX and move the open risk for GBP as well. Take this number, we divide it by 10. That's our risk. That's the risk on GBP, on NCD USD. Okay. Okay, so I've entered the position on NCD USD as well. Now let's look at more levels of interest here. Ooh, NCD CHF is breaking down completely here. I mean, this is also one of those where I would love to see some sort of support somewhere to go long. Add CHF thing. CJPY not interested. Euro. So Mars says you put all positions with the idea of USD weakness. What if not? It's not risky to put everything on one idea, but I'm not putting everything on one idea. I'm dividing risk up between all of these positions. I'm calculating the risk very carefully before entering this, and I'm not even like, if all of these positions get stopped out, I'm not even going to lose 1% of my account. Probably not even 0.5%. But if the idea is confirmed, then we'll be adding to the position. This is a beautiful example of a possible break of structure. We got this nice downtrend right here. This would be one idea, right? Just trade it back up, just like that. Super, super simple. Got that W right here, breakout, big range right here, downtrend, break of structure. So NCD JPY looks like one of those trades where looks interesting with a good risk to reward. Not, I would like to see, we could be moving lower though. Could be getting a better risk to reward lower. Now we'll look at Bitcoin. Okay, I'll be back in a minute. I gotta take a break, and so I'll be back in a minute. I gotta take a look at some altcoins as well. See if I can position myself for a couple of altcoins. Back in just a minute. Right. Did I go through all the Forex pairs? I think I did. Take a look at the indices. I would love to have make a save this one. Also, what I'm gonna do after this live stream is I'm gonna go into my personal account, because everything, all the trades I'm taking I'm taking them on the Fiverr's funded account, and it gets copied over to other accounts that I have with FTMO. What's the other one? Alpha Capital, I believe. Yeah, Alpha Capital, FTMO, and the Fiverr's, and I have my personal account. And what I'm doing with my personal account, I'm going to look at a couple of these setups, and I'm going to look at the best ones, and I'm going to go in with some heavy risk on the ones where I get the most confidence, perhaps Euro USD. And because I can obviously afford to take bigger risk on that one. That's one of the reasons why I made so much money on the S&P 500. I risked between 5 and 10% of my whole account on that position, which means I made in November, I made 30% profit on the whole account on that S&P 500, but I risked quite a lot. So when I get high conviction ideas, I go in with big size on my personal account, and I risk way more than I would ever do in a funded account. On the S&P 500, obviously, I'm looking for a retest like that one. So I'm looking at, I would love to see a retest of this level. And if I get that, to be fair, that would have been that one. So that level or this level, any retest of these levels, and I'll take a long position on the S&P 500 as well. US 30, I don't know, probably going to put alert down here. I think that looks like a really good level. Nice, we got this level on NASDAQ. Then the Russell 2000 I'm just looking at for get an idea of the market. Dollar currency index, Euro 50. DAX doing here. Stop moving lower. Felt some orders for that one. Having anything fun happening on gold? Not really. I think, however, a break in either direction of this range will start a big move. And if it weren't for that wick right there, I would say that I would trade it to the downside, but that move already happened. I'm not really interested in gold. What about silver? Really? Oil? The demand for oil usually goes up the end of the year. We are at, obviously, very low levels, but it looks very weak. Massive triangle though. Interesting to keep an eye on, and we should see a breakout in the coming week. Probably want to put some alerts here. I guess nat gas is the one that you're seeing usually a big moves leading into end of the year. We obviously saw nice bottom being put in here around November. Looking at the weekly, we are at range highs. Would not be very interested in taking a long trade here though. So this is the yield spread chart between German 10-year bond and the US 10-year treasury, and you see we add Euro USD to this, so that it mirrors quite nicely. Look at this. We had a look at this divergence here where we have a high on the yield spread here, while we form a low on Euro USD. Euro USD continues to the upside while the yield spread continues to the downside. That's the type of a divergence between the yield spread and the USD that can help us make a decision. Mars says, is it not safer to wait for the NFP release and then have a clear understanding of a future move and then try to place orders? Yeah, I mean, if you're trading based on news, if you're trading based on fundamentals, then definitely you want to wait for the NFP to kind of show you a direction. But looking at Euro USD, price will start moving when there's a catalyst, okay? So price will move when there's a catalyst, and that catalyst can be whatever. It can be NFP or whatever. Like, it's looking at the technicals here. It's this is a trade based on technicals, not fundamentals. Well, there is of course some fundamental ideas behind this, but I'm just looking for the fundamentals to potentially act as a bullish catalyst, and if it's a bearish catalyst, then I'll lose money in this trade, and that's just what it is. What it is, I don't really care. Look at this, by the way. Remember talking about this, how we might see a breakout of this symmetric triangle here, where You had a bounce inside the reload zone here, conflict with the high time from 0.618 and the lower ascending trend line. You get a break, a retest, and that retest is also ahead of the reload zone. Beautiful, absolutely perfect. That is picture perfect right there. These are all the altcoins I'm currently in. This is a really good bounce, by the way. This is another very good example of accumulation. Down long-term accumulation. Enter that zone, broke out, 114 days of accumulation. I got in on the break and retest right here. For more altcoins to enter, so I'm gonna start going through the going through a list of altcoins. Maybe perhaps try to find a filter. Perhaps could be adding the like the weekly 20 and 50. Look at altcoins that are below the weekly 20 or below the weekly 50. Maybe we'll find like this one, for example, Ren. Where this is a bad chart though, but this is a nice move. Okay, guys, gotta go get some lunch. It's been live for 2.5 hours now, but did a big high time frame analysis of the Forex market. Started accumulating some positions based on what I was seeing, and we'll see where this takes us. Let me know if you have any questions on anything that I covered today. You can go into the Discord and join. If you're not in, join the community. Ask any questions. I will gladly help you out. All right, guys. Thanks for joining today. We'll see you guys. I'll see you guys on Monday. Have a great weekend.